All right, today we're jumping into a really fascinating story of corporate reinvention. We're looking at how one company, Saladea Energy and Minerals, you'll see it called SEML, basically gambled its entire future on one single massive bet.
I mean, think about it for a second. How does a company just completely change who it is and where it's going? It's a question that keeps business leaders up at night, right? How do you pivot from what you've always done, especially when you're already a big, established player, and steer that entire ship in a totally new direction?
Well, this isn't some theoretical business school case study. This is the real story of a company that did exactly that. We're going to break down precisely how SEML pulled off this super high-stakes move and completely transformed itself from the ground up. Okay, so to really get this bet, you first have to understand the company itself. It had this solid foundation, but it was desperately looking for a new engine to really drive its growth forward.
So on one side, you've got the SAML of the past. Picture this, a successful, totally integrated metals company. They did everything from iron ore to steel wire, but the problem with the metals market is that it's notoriously cyclical. We're talking huge booms followed by massive busts. Then, on the other side, you've got the SAML of today, an emerging energy powerhouse, and that's what's driving all its new growth. So the big question is, how on earth did they bridge that gap?
This right here was the turning point, the moment everything changed. In August 2024, SEML went out and acquired SKS Power, which owned a huge thermal power plant. And look, this wasn't just them buying another building or another asset. This was them buying a whole new identity.
And believe me, the impact of that purchase was anything but subtle. Let's actually look at the numbers, because they paint an incredibly clear picture of this transformation. It's pretty dramatic.
Okay, so check this out. This is SEML before the big move. Energy, it was just this tiny little 8% sliver of the revenue pie. The legacy businesses, the ferroalloys and steel, they were the absolute titans, making up a combined 87% of all revenue. This is that classic metals company we were talking about.
Now, fast forward just 1 year. Look at this. The picture has flipped completely. Energy has just exploded from a tiny 8% to become the single biggest piece of the pie at 54% of total revenue. The metals business is still there, it's still significant, but it is absolutely not the main driver anymore. This chart right here shows you the mind-blowing scale of this change.
But here's the thing, revenue is only part of the story. The real key is where the profit is coming from. And as you can see here, the energy segment is the new growth engine. It's contributing a whopping 67%. That's 2/3 of the company's entire EBITDA, their core operational profit. So this new division isn't just bringing in money, it's become the main thing that makes the company profitable.
Okay, so we've seen the strategy, we've seen how the revenue mix changed, but what about the bottom line? Let's get into the hard numbers and answer the big question. Did this massive bet actually work? Yeah, this is the one that really counts, isn't it? Did this huge, risky move actually translate into real financial success?
120%. Just let that number sink in for a second. A single move led to a 120% jump in profit. That is an unbelievable leap in performance, and it happened really in the blink of an eye.
So what is that 120%? Well, that's the year-over-year growth in their profit after tax. It more than doubled. And it's not just profit. Total revenue also shot up by 76%. To put some real numbers on it, their profit went from 198 crore rupees to 437 crore in just 1 year. Now that is what I'd call a successful bet.
So where did all this growth actually come from? Well, this table tells the whole story. Look at their captive power. That's the power they generate for their own factories. It saw a nice little bump, sure, but the real story, the game changer, is that commercial power line. That's the new SKS plant. It went from literally zero to almost 1,200 million kilowatt hours of production. That one single asset is what fueled this entire incredible surge.
Okay, so pulling off a successful bet is one thing, but a really smart company doesn't just sit back and count the cash. They use that momentum to build for the long term. So what's next for SEML? It looks like they're firing up what you could call a two-engine growth model.
So first off, they're doubling down on energy. But now there's a big focus on clean power. They're developing new hydro and solar projects, which is a great way to diversify their energy mix even more. But at the same time, they haven't forgotten where they came from. Their second engine of growth is all about securing their raw materials, expanding their mineral and coal assets for both their metals and their energy businesses. They're actually calling this their second major lever of growth.
Okay, so let's zoom out a bit. What's the big takeaway from this whole story? Really, it's just a powerful lesson in how a company can completely reinvent itself if it has the guts to do it.
What we've been watching here is a textbook example of something called strategic diversification. It sounds fancy, but it's simple. SMEL pinpointed its biggest weakness, being tied to that crazy up and down metals market, and made a really bold move into a totally new industry to lower that risk. And by doing that, they didn't just protect themselves, they unlocked a massive new way to grow.
I think the lesson here is pretty clear. Sometimes the biggest risks really do lead to the biggest rewards. SML placed a huge but calculated bet on energy, and it has completely changed the company's DNA. It really makes you wonder, in a world that's always changing, which big company is going to be the next one to make a bet like this and completely reinvent itself? Thanks for diving into this with me today.